We know the Middle East is doing it, whether it's via their family offices, but maybe not directly in the sovereign wealth funds. It makes total sense for them because they want to be part of this entire thing. Middle East, next major player.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Dan Moorhead and Raoul Pal discuss why 2025 could be crypto's biggest year yet, highlighting factors like regulatory clarity, institutional adoption, and the integration of AI with crypto. Let's catch up with them to learn more.
It's very sensible that the U.S. save in something other than just gold. Gold's been great for 5,000 years, but, it's past its sell-by date. Digital gold's a great thing, so I think, the U.S. will do it. And then once the U.S. does it, you're right, there are all kinds of both strategic alliances and competitive dynamics out there. And that's the thing I think people forget is it does seem likely that places like the Gulf that want to stay aligned with the United States will replicate a strategic reserve. That seems to make sense. But equally, I think the countries that view themselves as adversarial to the United States would want to hedge, China being an obvious one, but there's a lot of countries out there, they're certainly not fully aligned with the United States and would want to at least have some of their savings or FX reserves in a currency that's independent of, whatever the U.S. Treasury Secretary wants to do. So I think you're going to see it from both sides, the U.S. and people that want to be aligned with it, and then people that are worried about U.S. hegemony in the financial system.
Yeah, it was one of the most, I think you wrote about this as well, and I'm sure we spoke about it. One of the biggest mistakes I think the US made was the seizing of the Russian private assets and then the seizing of the reserves, essentially making them worthless. Because that sent a signal to everybody that US money is not good.
Well, it certainly sends a signal that you don't have all of your savings in something that somebody could seize. And so, I think on the margin that's going to, encourage countries to think about saving in a stateless currency, right? Like that's what Bitcoin is a separation of money and state, right? So it's a currency, does everything other currencies do, but it's not controlled by any one nation.
Bitcoin's dominance in the crypto market has surged to a nearly 4-year high as fear spreads due to escalating trade war tensions. The U.S. government's new tariffs on Canada, Mexico, and China have rattled investors, triggering a mass sell-off in risk assets, including cryptocurrencies. Bitcoin's price dropped close to $90,000, marking a significant decline, while altcoins suffered even heavier losses. Many tokens saw capitulation wicks, with some losing over 20% of their value in a matter of hours. The sharp drop in the market erased billions in liquidations, fueling concerns about an extended downturn. Despite the chaos, Bitcoin's rising market dominance suggests that investors are seeking refuge in the most established digital asset. Historically, Bitcoin gains dominance during times of uncertainty as traders move away from speculative altcoins to more stable options. Analysts believe that the price action remains within a key trading range, with hopes that Bitcoin could bounce back from support levels near $93,625. If the cryptocurrency reclaims the $100,000 threshold, a rally to $105,000 could be in the cards, invalidating the bearish outlook that has dominated recent market sentiment. The ongoing trade war has also impacted the broader financial markets, with stocks suffering sharp declines. The S&P 500 lost nearly $1 trillion in market value, and the Federal Reserve is closely watching how these economic tensions affect inflation. President Trump's stance on tariffs has added another layer of uncertainty, prompting traders to adopt a more defensive approach. The volatility in global markets has pushed investors towards safe haven assets, with Bitcoin showing resilience despite the significant pullback. While fear dominates the market, some traders see this as a buying opportunity. The Crypto Fear and Greed Index has plummeted over 30 points in just 3 days, reflecting extreme caution among investors. However, long-term holders have remained largely inactive, signaling that they still believe in Bitcoin's long-term potential. If market conditions stabilize and confidence returns, Bitcoin's dominance may continue to grow, paving the way for a stronger recovery in the weeks ahead.
So if we're looking at the US regulatory side, what are you expecting to change? Because I'm starting to think, how far do we move back towards some variation of ICOs, for example, because it is a great vehicle for capital formation, needs tightening up. Things like the US users can't use perps and other margin products while everybody else can. Where do you see the regulatory landscape shifting over the next year or so?
Yeah, I actually don't spend a ton of time on the regulatory side since we can't really influence it ourselves. The main theme, though, is regulatory clarity, and that's been, I think, what's lacking, is that because of the lack of clarity, some things like trading of tokens went offshore to places like the Bahamas, and, we've had some negative consequences from that. So I think any clarity that the agencies in the United States could provide will be helpful. And I had served as chairman of Bitstamp for a long time, and it is difficult to manage a business when there's nothing written down. You have no idea what is a security, what's not a security. So as soon as there's more clarity on that, that will help. And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
No, I agree with you. And I think the ETF was huge in kind of breaking that log jam, where for years I'd be out there evangelizing for blockchain, and you talk in some firm and they would say, oh, well, we can't invest in Bitcoin for compliance reasons. I'm like, well, that's interesting. I've run a couple compliance departments and I have no idea what you mean. What do you actually mean by that? Like, why can't you do Bitcoin for compliance reasons? And then they just give the circular, well, for compliance reasons, And so now that BlackRock and all these very reputable firms have Bitcoin products out there, that just kills that. That was kind of the last, inane reason to say no. But it was a reason a lot of big entities said no. But now that you have, $35 billion flowed into branded ETFs, like BlackRock and Fidelity and Bitwise and others. So with that, I think it opens it up. And you're right. Wall Street, spends each company on Wall Street spends billions on all these siloed databases, and then every day they have to reconcile them to their own databases inside, and then they got to reconcile to the outside clearinghouses and all that stuff. And I think that'll take, the better part of a decade for all that to really actually happen, but it's coming. And Mike Cagney at Figure's a very good leading example that he had previously been a macro trader with us back in the day, and then founded SoFi. And they're doing mortgages on the blockchain. And I actually started out as a mortgage securities trader. And it's amazing how many people take a bite out of your mortgage payment, right? Like, there's all the servicers and the people. And, it takes 55 days for the check to get from one person to the other person. So putting it on the blockchain is very efficient. And his company Figure already has 10 billion of mortgages on the blockchain. And everyone's talking about RWAs. That's real. Like, that's a real world asset, and there's 10 billion of it already on the blockchain. So those are the things that help big institutions get in the space. Most of the main alternative managers, like Apollo and BlackRock, they're doing funds now that are on the blockchain. I think those are a bit more proof of concept than hugely important today. But it just, opens the direction we're going. Another great example, Ondo is putting treasuries on the blockchain. And so, the U.S., as you said, needs to export $2 trillion of debt every year, right? And what better thing than via, Ondo or stable coins? Because you're finding new buyers in every little hamlet on earth, right? Anybody with a smartphone can now be a loan money to the U.S. government, right? Like anybody with a smartphone in the weirdest corner of the earth can buy a treasury on Onto or whatever. So, there's that kind of stuff that is actually happening in the real world.
Bitcoin's price has dropped sharply to $91,000, marking a 6.4% decline in just 24 hours. This sudden fall has triggered panic among investors, leading to $7.5 billion worth of Bitcoin being moved to exchanges as traders seek liquidity. Such massive transfers often indicate fear-driven selling, but market analysts suggest this downturn may be short-lived rather than the beginning of a prolonged bear market. Despite the widespread concern, long-term Bitcoin holders have remained largely inactive, according to the CoinDay's destroyed CDD metric. This key indicator measures how much Bitcoin held for extended periods is being sold, and its stability suggests that seasoned investors are confident in Bitcoin's recovery. Their lack of movement indicates they are holding firm, believing that this price drop is a temporary setback rather than a long-term trend reversal. Bitcoin's current price action has formed a rounding top pattern, which could transition into an inverse cup and handle formation. If Bitcoin manages to bounce from its $93,625 support level, it has a strong chance of climbing back to $100,000. Breaking past $95,668 would mark the beginning of a recovery and could restore investor confidence. However, if bearish momentum continues, Bitcoin may face further declines, potentially testing the $92,005 level. A crucial factor in Bitcoin's outlook is whether it can reclaim and hold $100,000 as a support level. If this happens, the bearish sentiment could be invalidated, and Bitcoin might rally toward $105,000. Market observers remain hopeful that a rebound is possible, especially with long-term holders staying steady despite the recent volatility. The coming days will be critical in determining whether Bitcoin can reverse its losses and regain its upward trajectory. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.